You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Friday. All right, Philippine stocks snapping out of a three-day rally today, sliding by 0.6%, or close to 0.6%, really. The PSEi ending the week lower at 6,544.63, bucking the rally seen across Asian gauges, despite the central bank holding on to key policy rate sentiment weakened after the BSP raised its inflation projection for 2021. They're pegging average inflation for the year at 4.2%. That's up from 4% previously. Now in 2022, inflation forecast also raised to 2.8%. That's from 2.7% previously, adding to the sell-off. Infections yesterday reached another record high at 8,773. That pushed total active cases to almost 100,000, the highest so far in the country. Total infections in the country likewise closing in on the 700,000 mark, like what I mentioned earlier as well. Active cases also nearing 100,000. Stocks also fell after the World Bank said that the Philippines' recovery will fall behind than that of its neighbors owing to missteps in its pandemic containment efforts and insufficient stimulus. We have more details on that later, as well as the World Bank's weaker growth outlook on the Philippines. But before we get to that, one lender gave the go-ahead for a $300 million loan for the country's vaccine rollout. Asian Infrastructure Investment Bank, or AIIB, just extended its second financing for the country following a $750 million loan last year. The Chinese embassy to the Philippines made that announcement, saying that the loan will provide timely access to eligible vaccines for the country's immunization plan. For now, let's check in on our leaders and laggards. If you try to take a look at the figures here, you'd see a number of property stocks here climbing. That's after the BSP reported that real estate prices index rose 0.8% year on year in the last quarter of 2020. And that's also a 2.4 increase rather from the previous quarter. That's bolstered mainly by properties outside the capital, which grew by 5.9%. Now, looking at a number of property players here, you have Mega World, the day's best performer, up 3.2%. The stock now valued at 3 pesos and 56 centavos. The MCI likewise also in the green, up over 2%, now at 5 pesos and 43 centavos a share. On the downside here, JG Summit, our biggest drag here, that ends the day. The worst performers as well, down 3.4%, now at 59 and 70. Pure Gold also, we did report that the grocery here is enjoying a 6-day rally, but that ends today. The stock is down close to 2%, now valued at 40 pesos and 20 centavos a share. Now, one quick look at a specific stock, this time from the all shares, that is Philippine Estates. That saw shares rise as much as 36% earlier, its biggest climb in 3 years after the board greenlit a rights issue to fund land acquisitions. The plan is to sell 1.45 billion shares via stock rights offer for up to 1 peso a share. This as they eye to expand inventory in areas that still have high demand for homes, such as Cavite and Bulacan. The stock, however, paring back gains after that 36% rise. It ends the day still up, though, close to 8%, now at 0.475 apiece. Here are other headlines we're keeping our eyes on. The World Bank slashed its growth outlook for the Philippines this year following the recent surge in new COVID-19 infections. The Washington-based lender now sees the Philippine economy growing at a slower pace of 5.5% from its previous forecast of 5.9%. The adjusted projection falls below the government's target of 6.5 to 7.5% growth for 2021. The multilateral noted that the Philippines suffered the sharpest decline in the region, contracting by 9.5% last year. Socioeconomic Planning Secretary Carl Kendrick Chua, who is a former World Bank economist, tells the Philippine Star that it's too early in the year to make such changes in forecast. For 2022, the World Bank sees Philippine GDP growing 6.3% year on year. That's a more bullish projection compared to their previous forecast, but still lower than the government target. Now, Moody's likewise isn't seeing positive signs from the Philippines. The debt watcher says multiple factors slowing the country's recovery efforts are in place. Apart from renewed lockdowns due to rising infections, Moody's notes the spike in pork prices due to the African swine fever and higher vegetable prices from last year's typhoons as lingering economic threats. As Moody's puts it, the country is coming from a very deep hole, in contrast to some regional peers which are either already seeing recovery or achieving new peaks in GDP. Now, to give us more insights on this economic sinkhole the Philippines is trying to escape from or get out from, we have with us Moody's Chief Economist for Asia-Pacific, Steven Cochrane. Good afternoon.
Good afternoon.
All right. So how much of a laggard is the Philippines compared to the rest of the region? And what's really driving that holdup?
Yeah, I would have to say, I think Philippines is behind the pack. It is the laggard. Really, it's between the Philippines and Indonesia, but conditions, just seem to be uncertain across so many dimensions. When I look at the pace of recovery across Asia, I look at four different primary factors. One is the pace of COVID-19 and new infections. The second is how countries are doing with vaccines. The third is government policy, fiscal policy, monetary policy, and the fourth is the role in global trade. And none of those factors are helping to drive the economy in the Philippines. As you mentioned, the number of new cases of COVID is up at a record high, and it is rising. It seems to be not under control at all. And second, the rollout on vaccines, which is critical in a situation like this, has been slow. And that the news about the AIIB funding, providing funding for new vaccines is very, very welcome news. But until now, there hasn't been sufficient funding for vaccines. And again, the rollout has been quite slow. Fiscal policy, modest, as you mentioned as well early on. I think the more essential fiscal support could be provided to small enterprises, to individuals that have lost jobs, to the industries that are really suffering. And then finally, one of the most important factors that much of the Asia-Pacific region is improving on is on the back of global trade. Global trade is the one component of the global economy that is back on track, completely recovered from where it was earlier in 2020. But exports out of the Philippines are flat to slightly down over a year ago, whereas in much of the rest of the region, up 10%, 15% over the year. So none of these factors are looking good for the Philippines. It's kind of a perfect storm right now for uncertainty in the Philippines.
Okay, I like how you put it, a perfect storm really when it comes to uncertainties here. But at the same time, in the situation that we are in right now, we are in a 2-week bubble. How much of a drag are you expecting from that?
It will be a bit of a drag. We're working right now on upgrading or updating our forecast. I thought that the Philippines might be able to produce a 6% growth rate this year, coming off of the sharp downturn last year. My guess is that when we're done with the forecast update, that will be something close to, it could be down as low as 5.5% as well for this year, certainly between 5.5% to 6% at the very best. It's just hard to see the Philippines doing any better than that, given all of these constraints to the economy right now. And now the additional quarantines that have been put in place in Metro Manila and the surrounding provinces around Metro Manila.
Mm-hmm. Given that as well, given the impact of this 2-week return to stricter restrictions or mobility curbs here, how do you expect that as well to impact at least our GDP for the first and the second quarter?
It'll certainly, for the first quarter, it'll certainly bring it down. I don't think there'll be a decline in the first quarter, but the quarter-to-quarter growth between Q4 and Q1 is going to be very, very modest. Q2 should be better if indeed vaccines can be rolled out and if indeed the quarantine orders can be lifted. I would say that's uncertain at this time, given the level of new cases right now in the Philippines. I think now, we put off until, I think one has to put off in their minds until Q3, maybe even the fourth quarter before we see a really strong rebound in the Philippines. And it all depends on COVID at this point in the Philippines. It all depends on whether that caseload can be brought down.
But Stephen, what are the bright spots here for the Philippines? What can at least the country bank on to help bolster recovery, and when do you see that happening?
Well, I think the brightest light is that while I mentioned the rollout of vaccines has been slow, at least it is going out, right? Mm-hmm. And the news that there is some external funding to help improve the supply of vaccines. I know what we've seen in almost every country that's rolling out vaccines is that it's very slow in the beginning. Every country has some logistical hurdles to solve. No country's ever gone through this so quickly, and no country can really completely plan it out without making some missteps. So one has to assume, and I think it's a good assumption, that the pace of vaccine rollout will accelerate going forward. The roadblocks that are in the way will be pushed aside. Supply will improve, and that will bring down the caseload very, very quickly, as we're seeing in other countries that have successfully rolled out the vaccine. The caseload has come down pretty quickly, and I think that's the best case for optimism, is that will be the outcome over coming weeks and months.
But at the same time, looking at your report, you did mention that you see herd immunity in the Philippines being achieved by 2023. Does this mean weak growth until then?
The herd immunity is going to be really important in terms of being able to open up the service sector of the economy, and also to be able to open up international travel in and out of the Philippines, right? So that'll be very, very important for those two aspects of the economy. As one gets closer to herd immunity, then the domestic service side of the economy will begin to accelerate, maybe slowly in the beginning, and then later there will be a lot of pent-up demand for goods and services, and there should be some very good acceleration in demand for services as we get closer to the end of this year, as households are able to move about, as service workers start working and there's income again, and then households can begin spending, and business sentiment improves as well, and there might be some additional investment spending going on.
All right. Now, at the same time, you did allude to this earlier. Well, of course, our economic managers have always maintained a prudent stance when it comes to fiscal response. Is it time now to roll out another stimulus measure?
I think the point you make that fiscal policy has been very, very prudent in the Philippines is true. Because of that, I think the Philippines does have access to markets if they need to borrow, if they have to have another year of deficit spending. And frankly, I think that additional fiscal spending would be appropriate at the moment. The longer that the Philippines remains in a very, very difficult situation, the deeper the so-called scarring might be in the economy. In other words, small enterprises that go bankrupt and can't get started again, individuals that use up their savings. And even going forward, the longer this difficult period in the economy lasts, the harder it is going to be for credit lending to pick up again, because it's going to be hard for banks to assess the financial health of companies that have gone through this downturn for such a long time. The numbers are not going to look good. Banks are going to have to look through that and make some assessments in a little bit of a different way in terms of how they assess the credit quality of individual companies. So the more support the government can provide now, frankly, I think the better.
All right. Thank you very much for those insights. Again, we have with us Steven Cochrane, Chief Economist for Asia-Pacific of Moody's. Thank you, sir.
Thank you.
And those are the biggest news this trading day, March 26, 2021. Catch Business World live again next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.